Boost Business News, where news for business people.
Hello and welcome. You're watching Bloomberg Quint Live and this is Trendspotting. I'm Navneet Saluja D'Souza.
Good morning, I'm Agam Akil. And in the next 30 minutes, we deep dive into specific trends in the markets to draw out key takeaways and its implications for the investors. But first, the headlines. Moody's upgrades India's ratings from Baa3 to Baa2 and first in 13 years. And Indian markets cheer the ratings upgrades. The Nifty gains more than 100 points and bank stocks also lead the rally. And the Indian currency strengthens by more than 1%. Bond yields drop after Moody's upgrades India's sovereign ratings. And HDFC Life makes a good debut on the exchanges. It lists at a premium to its issue price of 260 rupees per share.
Okay, let's take a look as to how the markets are trading. Clearly, it's been a great day for the markets after that Moody's has upgraded the sovereign rating for the country. But look at Bank Nifty now. That's trading at its all-time high levels, currently just about at 25,860. But clearly, the financials are leading. If you look at the Nifty contribution, HDFC, ICICI Bank and HDFC Bank have contributed the most. And the other heavyweight, Reliance Industries, continues to contribute nearly 10 points. But what is capping the moves is clearly the IT pack. So the Nifty IT index is your sole loser for the day. That index is down 1%. And also stocks like Infosys, TCS, Tech Mahindra, HCL Technologies, which are all your Nifty constituents, are dragging the index lower. Rather, they're capping the moves on the upside. What else is doing good? Well, the volatility is down. So that's another good news. India VIX is trading just about that mark of 13. And you've got sectoral indices from the likes of Nifty Metals, which is up 2.5%. The Nifty Realty Index has also seen good amount of gains coming about. In terms of Nifty gainers, till now, Vedanta is your top gainer with gains of almost 3%. You've also got stocks like ICICI Bank from the Pharma pack. Cipla is bucking the trend. That counter is up nearly 3%. And Tata Steel, HDFC, Hindalco are a couple of your other gainers for the day. On the losing side, as we mentioned, this is the IT pack, which is pretty much weak. So Tech Mahindra, Infi, HCL are your top losers, followed by Bharti Infratel, which was up in yesterday's session, is seeing a bit of profit booking, and Bosch is also down nearly 0.5%. But one space which is doing well is clearly a couple of your real estate, and these are the small cap and mid cap real estate companies which are doing well after the cabinet has increased the carpet area for middle income group houses under the Pradhan Mantri Awas Yojana scheme. So you've got stocks like Kolte Patil, if you could just pull up, that's seen good gains coming about today. That's up nearly 13%. You've also got stocks like Ansal Housing, Puravankara, also Peninsula Land and PSP Projects are a couple of your counters from the real estate pack which have gained on back of that news. Is there anything else in the broader markets, Agam?
Not really, Navneet, except for the fact that the broader markets are also doing very well. The advance decline ratio is certainly in towards the advances. And, you know, in the BSE mid-cap space, just a few stocks that I want to mention. The Central Bank of India up 6.5%, Shriram Transport Finance, along with Biocon, all gaining anywhere between 4.5–5%. And good gains coming in the likes of SAIL and UBS. So we have seen gains across sectors, especially except for the IT sector, for that example, where we've seen a little bit of weakness. And of course, other than that, there's Cholamandalam and Oberoi Realty looking at, well, marginal losses for now. But that's as far as the markets are concerned. We're going to move on to the first trend of the day. And I do want to talk about the shrimp exporting companies. Navneet, everyone knows how well they've done in the recent times, and this includes Apex Frozen Food or Waterbase, or for that matter, Avanti Foods, you know.
Sure, before that, if you could just take our viewers through what are the trends that we would be tracking on the show. All right, we will, as Agam mentioned, we will discuss what is making Apex Frozen Foods rally as we connect with the Executive Director K. Subramania Chaudhary, and we also discuss the rising demand for manganese ore with Tarang Bhanushali of IIFL Wealth. And we also put the spotlight on what's moving the markets today. Agam, you can take it forward with Apex now.
Well, there you are. So, okay, let's pull up some of those, some of the research that we've gotten together. Starting off with, your comparison in terms of Waterbase and Apex and the way they've moved over the last 3 odd months, or for that matter, the last 6 months. Of course, Apex is a recently listed company, so we have a certain timeline for it. But all these companies have made substantial gains over the last few odd months. It's not only because of the fact that there has been an increase in terms of demand. A lot of these companies are also looking at a substantial increase in capacity, because of which you're looking at, well, a considerable up move in a lot of these counters. So, well, you know, on the whole, these companies are looking good, and we actually have a management right now. We have the management of Apex Frozen Food. K. Subramania Chaudhary, who is the executive director at Apex Frozen Food, is in conversation with us. Hi, Mr. Chaudhary. Thanks for joining us. Mr. Chaudhary, firstly, I'd like to know a little about the kind of demand that you're viewing right now in terms of your business. And the reason why I bring up demand is that there are just a few concerns coming in from the European market, where there has been a little bit of aversion when it comes to shrimp from the Indian market. So can you take us through these concerns, and can you also give us a broad picture of how you see the demand in the industry as a whole?
See, thank you very much, Aman. First thing is, shrimp being a food product actually is having a very good demand across the globe, not just from the North America, but also European Union, as well as other countries of Asia and Middle East. So the demand for shrimp, because of it being a good protein value, is being considered as a good proposition from the seafood category, because as you know that worldwide, there is a lot of averseness which is increasing against red meat. So naturally, the preference of seafood and shrimp in specific with regard in the seafood category is the demand is increasing of late, and it has been moving across the globe. In India's case, it's a different scenario because we are primarily a vegetarian state. I mean, our per capita consumption of non-vegetarian or even the seafood products is much lesser compared to countries of like USA or Europe or China and other Asian countries. So the demand has been upbeat, and we look forward to address that demand with the rise in capacity of our company, as well as the whole industry is increasing the capacity like you had mentioned. Now, the other point which you mentioned with regard to the EU having concerns with regard to the import of shrimp from India, to tell you the truth, when we need to deliver product to a specific market, we need to address their concerns, and naturally it will be taken care by both the sector as well as the respective governments. So in the present scenario about the antibiotics issues, actually the government of India, with its through its two main departments, Export Inspection Council and the Marine Products Export Development Authority, have been coordinating with the sector and ensuring that the right protocols are in place to ensure that antibiotic-free product is going out of the country. And as far as the industry is concerned, each and every company is ensuring that they source the product only after testing, and thereby ensuring that the product which is actually exported out of India is antibiotic-free. Now, in this process, of course, as you know, it involves many players and different sources of raw material. There could have been stray incidents which have occurred in the recent past. Of course, as far as the EU making a visit to India is concerned, they have been doing it every year, and they continue to do it because it is their right to ensure that the facilities.
What is your exposure from European Union?
Sorry?
What is your exposure to European Union? What percentage of your revenue comes from European Union?
With regard to our company, right now it has increased from 19% to 26%. Actually, our European Union business has actually increased in the current year, in the last 2 years.
Do you not see any risk coming in from this inspection or rejections that have been reported?
As long as you have the right protocols and systems in place to ensure that you can cater the product to those markets, you shouldn't be having an issue. And in fact, the industry is moving in that direction. Along with the industry, even our company is moving. That's how, yes, it is true that our product is tested. 50% of the arrivals of our product is tested in the European Union, and everything is being tested and cleared because we ensure that we don't send such kind of a product or contaminated or antibiotic prone product out of India. So thereby we ensure that we have a trouble-free clearance at the destinations.
We have seen the kind of revenue growth that you have done in the first half of financial year 2018. Should investors expect something similar in the second half also, because with your capacity is also increasing for the second half?
Actually, if you recollect the last time when I had interacted with your channel, the IPO, when we got listed for a specific object of creating a new facility of a 20,000 metric ton per annum, which is going to start next year actually, maybe by the end of first quarter of next year. And however, we did consider only 50% utilization of the new facility next year. In the present year, we did enhance our leased capacity, thereby because the demand is so huge, especially from our primary markets, both in North America as well as European Union, we had to address that demand, and thereby we added an additional leased capacity. Thereby, we not only enhanced our volumes, thereby also our revenue, the realizations also.
So you expect the similar trend in the second half also, you're saying?
Yeah, we would be maintaining yes, that's what we are planning. In fact, we are ensuring that because we have our programs planned, because as we have enhanced our capacity, our capability to create program businesses with our customers gets enhanced. Thereby, we have a more of a forward thinking with regard to how the business should go, in which direction it should go. Yes, we are positive, and we are very much confident that we will maintain the same similar growth. Correct.
Right. Mr. Chaudhary, if I look at the CAGR for revenues as well as the bottom line, it's been pretty attractive in the last 5 years, almost 28 to 29% for both the metrics. Since you're a newly listed company, and I'm sure your shareholders will be happy the kind of returns they are getting from your company. Just wanted to check, what's the kind of dividend policy that you're adopting right now? What's any strategy that you're working out there?
Yes, with regard, first of all, I would really like to thank the investors in India and outside India to have their confidence in our company, and for sure, boosted with their confidence, we are also moving ahead in our growth. Now, with regard to the dividend, we are actually finalizing our policy, which we will definitely have a clear-cut policy with regard to having a dividend. We did declare a dividend before we got listed. Of course, as of last year, it was at 10%. But this year, we are having a concrete policy of having a minimum dividend, and that will be spelled out very soon. And we will be taking it in that direction. We will be a dividend declaring company, of course, and a positive note. Yes.
Okay, so Mr. Chaudhary, from what I understand is, as far as your targets for your capacity are concerned, with respect to FY18, from what I understand is that it comes down to 9,240 for under-owned and around 6,000 in leased. Now, can you give us updates on that capacity expansion? Secondly, what is your current utilization level at? And finally, if you could also give us an impact of the rupee when it comes to your income, especially because of the fact that you have so much exposure to your markets abroad.
Sure. With regard to the capacity, as I had mentioned earlier, like you rightly stated, we have a 9,250 metric tons of our own, which of course was basically planned on a two-shift basis. But whenever it is required, we do add an additional shift so that we can produce more. It is more to do with the market demand. And with the leased capacity, yes, we are currently having a 6,000 as we enhanced from 3,000 metric tons last year to 6,000 metric tons this year. We are optimally utilizing it over 80% at this point, 80 to 90%. We are at that range. Of course, there will be certain months where we would be touching 95 to 100%, but it's on an average, if we see, we'll be looking at 85 to 90%. That is with regard to the capacities, and we are really looking forward for our new project to be starting next year, so that we can have a much bigger capacity to ensure a steady growth of our business. With regard to the foreign exchange fluctuations, we do cover our risks with forward contracts on a continuous basis. It's a regular process which we follow, and we do ensure that we mitigate our risks by basically covering our risk forward contracts, and we do ensure that we have the right premiums also. So we do basically mitigate the risk of any sort of losses which can occur with regard to foreign exchange fluctuations.
All right, Mr. Chaudhary, we leave it at that note. Appreciate you joining us today. And also, Soumya, thanks a lot for taking us through that. I guess in the same industry, Soumya, there is Avanti Feeds, which is given 4 times the return in this financial year. So basically, it's just the pent-up demand which is leading to these gains which we're seeing in the stock price?
Avanti Feeds is it is more of a shrimp feed company than a shrimp exporter, and Apex is completely shrimp exporter. But then obviously the shrimp demand is going up, obviously the shrimp feed demand will also go up.
Sure.
Right, naturally.
Okay, so that's about that industry which has gained a lot in this year. Apex Frozen as well as Avanti have seen spectacular gains coming about. Let's move ahead then. Moody's upgraded India's sovereign rating for the first time since 2004, citing continued progress in the nation's economic and institutional reforms. The rating agency on India's rating up by 1 notch to Baa2 from Baa3. Well, earlier today we connected with ace investor Rakesh Jhunjhunwala to get his views on how will this impact the investors, domestic as well as foreign. Listen into what he had to say.
The locals are far more better investors and better anticipators of growth than the foreigners. And in my opinion, this flow of 1 lakh crore into mutual fund, the investment in the last 12 months, this is just the beginning. It's not a flood. The flood has still to come, and the tsunami has to come after that. So I don't care for the foreign investor. Let them do what they want. I'm more concerned about the local investor and his money. This phobia of foreign investor, was we also have capital here. They sold, or did the markets go down? And to my mind, I don't look at foreign investor and local investor. I think for the local, there is no choice but equity. And I'm not looking at for 30% return and 40% return. I'm looking at 15% return.
Well, Rakesh Jhunjhunwala is certainly in mind to disregard what FIs are doing, and perhaps that's this is the domestic money which is coming in, which is driving the markets. But we'll move on to our next trend, and that's demand for manganese ore is on an up move. With prices rallying and MOIL being a market leader in the space, what does this bring to the company? To give us a view here, we are in conversation with Tarang Bhanushali, the Assistant Vice President and Equity Research at IIFL. Hi Tarang, thanks for joining us. And of course, along with Tarang, we also have Nikki Mirchandani, who also tracks this sector very closely. So Nikki will also perhaps help us to take us through these the numbers for MOIL as well as the outlook. But Tarang, I'm going to take the first question here. This is a strong performance for MOIL, which has been driven by pricing essentially. So what's led to these prices in October, and what is your outlook when it comes to manganese prices in general?
See, I expect manganese ore to gradually increase over the next 2 years. This is largely on the back of rising demand for steel products. As you know, that steel production has been gradually rising globally with the ex-China demand now growing, and even what we were expecting for China to come down, but we have not seen that. The demand has been higher at that end also. And for the next year also, I believe we would be having higher demand for steel in China. So the overall demand for steel, which is improving, would largely lead to higher demand for manganese ore, as it is almost 1 ton of steel. For production of 1 ton of steel, you would require 8 kgs of manganese ore. So simultaneously with higher production of steel, you will see higher demand for manganese ore coming in.
Tarang, hi. The second question that we have for you is, are we looking at better times for the company in the second half of the financial year, given that the quarter volume offtake at 2.65 MT was down nearly 15% year-on-year basis and 14% on sequential basis?
See, what we can see is that in the second half, MOIL largely sells in the domestic market, and a Q2 normally is a weaker market in the steel segment in India. So, wherein with major producers expected to increase their production sharply in H2, I believe prices, the demand for MOIL will also increase on that side. Secondly, in Q2, the global prices had, at the end of Q1, global prices were quite weak, and so we saw an increase in imports in India in Q2. But then with prices stabilizing, I think again the demand for ore from MOIL will also rise in second half, and that would boost the overall volume growth for MOIL.
Talking about operating performance of the company, though I understand for the power point of view, it is not as significant and not a big contributor to the operating profit, but then that segment has remained weak in terms of the operating performance. Almost the profits have come down by 10% year-on-year basis and almost 21% on sequential basis. I'd like to understand your outlook for that business.
Well, I think it is largely into the wind power segment, and change in wind speed can impact your performance to some extent. So, but it will not change the overall scenario. So, not much of importance is normally given to the power segment, and I think it would remain largely flat, and the production levels will gradually improve as the company continues to push for the renewable sources. So, the wind power addition will lead to higher production for them.
Okay, so Tarang, domestic cues are clearly positive for the company. What do you think can bring about disruption and perhaps some challenges when it comes to MOIL?
See, disruption for the company can only happen if the global prices come down. If you look at the cost of production, it is one amongst the lowest globally also. In the domestic market also, it has around 35 to 40% market share. So disruption for it can be that global prices can crack down due to lower demand or supplies being increased from South Africa to some extent. So these are the only disruptions I think which we can see in future. But otherwise, operationally, the company has been quite sound, and the numbers are largely led by the movement in global manganese ore prices.
Alright, Tarang, the company announced the capex plans of 460 crores sometime back for the development of its existing mines. I'd like to understand, where do we stand with regards to that as of now?
Well, there has been a delay in most of the capex, and we have seen that in majority of the PSUs that the commissioning has been quite delayed. They are trying to increase their underground mining and have been trying to increase the output from the existing mines by getting deeper and at the other mines also. So that has but that has been quite slower than what we were estimating. In fact, if you look at the volume growth, it has been quite stagnant over the last few years. And somewhere we were expecting volume growth to pick up from second half of FY17, but we have not seen that. I believe by the end of FY18, we will see one or two mines start contributing and lead to the volume growth for the company.
Tarang, talking about valuations now, the stock has run up significantly in the past period, like a 50% gain seen in the last 6 months, and commands an EV of 6.1 times its FY19 EBITDA. Do you think such kind of the stock justifies this kind of valuation and has the room for further upside here on?
See, normally the mining companies trade around 6 to 6.5 times EV by EBITDA FY19, and this is the level what currently MOIL is trading. So I would say the further upside from current levels would be difficult, but the stock at the current price is fairly valued. It is not overvalued. I would say not overvalued, not undervalued. It is in the band where most of the mining companies normally trade at.
All right, Tarang, thank you so much for your time. We'll leave it at that.
Okay, that was the trend in the manganese ore side, but I just want to pull up the new kid on the block, HDFC Life. Remember, it had a tepid listing, but the stock has now gained momentum. If you could just pull up the intraday chart of HDFC Life, it's up as much as 19%, so definitely it's having a good day on day one of its listing. Remember, the issue price was almost 290, and the stock currently trades at levels of as much as 344. Okay, moving ahead, the ratings The ratings upgrade by Moody's should have come much earlier than it did. That's the word coming in from chairman of HDFC. He also says the reforms by the government are a positive for the economy and the rating should have been higher than Baa2. Listen in.
I think it's taken a long time for Moody's to give India an upgrade in its rating. I've always felt that India's rating was far below what it should be, particularly during the last 2-3 years, the number of reforms the government has undertaken. It's a little too late. We should have got it much earlier.
Well, that's the word coming in from Deepak Parekh that the upgrade should have come in a lot sooner. But with that, it's a wrap on this edition of Trendspotting.
But don't go anywhere. Up next is Hot Money. Stay tuned to Bloomberg Quint Live.